how to find wide-moat stocks that outperform the market. This is what we are going to talk about today. I will give you specific examples, specific techniques so that you can detect these wide-moat businesses and finally invest in quality companies, because most of the time quality companies outperform the market. You have excellent companies available at a fair price. This has been my sweet spot to find the best opportunities and to generate some alpha in this market. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now and I have achieved a performance above 20% per year, which means I know this strategy very much, and I will explain this strategy, how you can find Wide-Moat stocks, by talking about this post from Long Equity. You can subscribe, follow to this account. It's wonderful. He says, here is my framework for understanding monopolies and duopolies. And you have this beautiful, absolutely beautiful framework here. So, in this video, I want to talk about how you can detect a monopoly or a duopoly. What kind of attributes you want to detect before making an investment in a quality company. Why? You have to ask one simple question. That's basically it. Why aren't there competitors offering similar products and services? You will see that we live in a complex world, but sometimes some industries are very simple to understand, because for some industries you have one player. It's a monopoly. Look at ASML, the Dutch company in the EUV market. So an AI-driven industry, chip maker. You have these big machines the size of a bus, and ASML is in a monopolistic position. Nobody can steal their product. China has been trying to copy ASML without much success. Some companies in Japan tried without much success. Over the past few years, you have seen some competition coming after ASML. Guess what? They all failed. And ASML has what? 5-10 years of advance, 10 years ahead of all the competitors. This is a pure monopoly. Okay? Some companies are very simple like this. The industries have one player, sometimes two players, and that's basically it. You have three distinct attributes that will make a stock impossible to copy. Sometimes it's very difficult for competitors to offer a similar product and service. The first one is the knowledge barrier. Entrants don't know how to compete. So, who has it? Businesses selling something that is complex. Let me put my face here. Complex and hard to replicate, like proprietary technology. I mean, ASML is a good example. For ASML to build a big machine like they do, you need hundreds of thousands of pieces. And you need to make the machine work with all these small tools. And you need to do this for thousands and thousands and thousands of times. And China is very good at cloning what works. And China, so far, is not doing it. So they tried to steal employees from ASML without much success. They still can't create a machine that does exactly the same thing as ASML. It is not working for the moment. Maybe in 5 years. Well, we've been hearing this for too many years now. So ASML is special. You have so many tools at the same time working together. It's like impossible to clone what they have created. And you have a great book called something like Focus, the ASML Way. Just put this on Google. You will have a great book that will explain how impossible it is to copy ASML. Okay, that's a wide moat. You have a monopoly in the world, in a growing industry with fat margins, and the management is competent. Wonderful, right? A competitor would require access to trade secrets and significant expertise to compete. Some examples: competing with the semiconductor equipment companies, Applied Materials, ASML, KLA Corp, or Lam Research would require knowledge protected by trade secrets to ensure their machines work reliably at scale. The at scale is very important here. This includes thousands of processes, not documents, in patents. So, knowledge, extreme expertise, it's impossible to copy to the extent of ASML. Impossible, because it's just too hard. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. The capability barrier. Entrants aren't able to compete. Businesses selling something requiring a supply chain that is difficult to access, or infrastructure that is difficult or expensive to acquire, a competitor would require significant capital, time, and resource to compete. For example, competing with TSMC would require significant capital at the state subsidy level, or competing with Visa, MasterCard, it's a duopoly after all, would require significant time and capital to assemble a network of thousands of banks, millions of merchants, and billions of card holders. And every year you have a couple of articles talking about how Visa and MasterCard will be disrupted because you have a new competitor. Guess what? Every time they fail. Every time Visa and MasterCard stay a duopoly. If this was so easy to compete with MasterCard and Visa, you would have more players. Guess what? Years after years after years, you have a duopoly, Visa and MasterCard. They are far ahead of competition. For good reasons. They have created a network of millions of people at the same time. Trustworthiness inside this network. So nobody has the means and the hunger to go after them. They know it's impossible. And if you try to disrupt them with the stable coins, for example, MasterCard and Visa will embrace the new technology of stable coins in their technology, in their network. So it's impossible. Literally impossible. Now people are talking about some countries that are doing their own equivalent of payment system, Visa, MasterCard. Same thing for Europe. Well, if you think this is a big threat, I highly recommend you look at the track record for Visa and MasterCard. This is all I have to say. The third element, you have legal barriers when entrants aren't allowed to compete. Maybe this is the best one, I would say. Literally, you have the government helping you to be a monopoly. It's very strong, but one day maybe the government will change its mind and no longer help you. So maybe you have a risk with this legal barrier, but it's very, very, very strong. Who has it? Businesses selling something that is protected by intellectual property or requires regulatory authorization to sell. A competitor would require licensing of the IP or regulatory authorization to compete. Some examples that I know very well: competing with FICO, Fair Isaac, and Moody's would require securing regulatory recognition, convincing regulators, banks, and investors to rewrite regulation, compliance frameworks, underwriting standards, and risk policies built around FICO and the incumbent credit rating agencies. It's literally impossible to disrupt FICO. You have a new FICO. The FICO score is the score you have when you apply for a mortgage in the US. And for many years, some competitors have tried to come and disrupt FICO. You had an equivalent, the Vantage score that was created in 2004, and they've been trying for years and years and years. But guess what? FICO has the best score. FICO has the best network. FICO has everything that is the best, and it is being helped by the government. So nobody can really steal their customers. FICO deals with 97% of all the banks. Everybody uses it. Everybody is used to working with the FICO scores. They've been doing this for 50 years. They know exactly. It's cheap, it's convenient, it's fast. They know. Okay, so it's very hard to move FICO. The same thing is true for Moody's and S&P Global. They have the rating agency duopoly, and nobody can steal this market from them. Literally impossible. These are three attributes that make impossible for competitors to offer similar products and services. So if you can spot these 3 patterns, one of these 3 patterns for your quality company, you can spot some competitive advantages that will improve the business model. Because all these stocks, all these companies, they have a huge competitive advantage, which means they have pricing power. They can grow revenue more than competition. They can grow earnings more than competition. They can grow earnings per share, margins, free cash flow. They can do everything better than other stocks. And if you fill your portfolio with companies like this, in this situation, you increase your chance of outperforming the market. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.